Good evening, Nick Inman from VolumeProfileTrader.com on Thursday, June 21st, and the market took it across the head today. Got whacked pretty hard, but I think it was a little bit expected. Maybe not all in one day, but you'd expect a down move back to the point of control because overall, and I think we've made this pretty clear, especially after the Fed's news. What else is there to know? Market sells off, and that establishing the range. And I think you continue to look at this 1300 level as major support and kind of your bogey for long. If we break below that, then you probably want to be looking. Well, you definitely want to be looking to get out of your longer term long positions or scaling down, and kind of going from there. So overall, here, let me show the daily or the hourly chart. Okay, 90 days, gonna bring it down to the last month or two. I drew this pattern. It looked like a bearish rising wedge pattern, especially with these lows here, just all the way up. And notice once we got to those levels today, there was no bounce. We just sliced right through and went to the nearest support, and which was obviously the point of control for the month so far, and just shows you how accurate it is. Look at how we stopped, bounce. There was enough selling pressure to push it all the way down to those levels, and then of course you would expect at least something at those levels. But it sliced through, trendline support came all the way back down to a big volume support. What I would do is, on any strength in the market, if you did not scale down or get out of your positions, take profits or take your losses and run, because I do think that we're probably going to see this type of move. If we do get an opportunity to sell at 1335 or so, I would take it. That includes shorts, which were actually awesome today. I didn't announce it, but I did. Basically, I just happened to catch it right on the close. Beautiful setup bar here, and we saw a huge move down on Freeport. I was expecting a push down to 3420s, and we've sliced through this high volume area back down at these lows, where I'm sure we'll see some type of a bounce. But is this something you want to be buying? No. This is full on liquidation right now, which I was kind of waiting for on Freeport. I tried to go too early back. Let me zoom back in. Tried to go too early back on these bars over right here. Didn't work out. Got stopped out. Didn't actually. If I remember right, I do think I tried to reshort. I held on to the position. It was small, and I think I added to it on this bar right against this value area for the month of May. That was my resistance level. Sure enough, paid off. So really, what's the downside target? Well, other than 33 current lows, this could easily go down another 50 cents, 75 cents. But it's too late to get involved in this. I coulda, shoulda, woulda. But Alright, Apple rolling over off of the value area, basically double top here, and now we're seeing the rollover. If the market's going to go down, I'm sure Apple's going to go down with it, just like the rest of these names. So just be prepared for that, and don't be overexposed to the long side. Actually, hopefully, if your stops were tight enough today, you should have gotten hit on a lot from the long side, and hopefully your short side maybe didn't emerge as net short, but pushed in that direction where at least you're market neutral. Unless if you were day trading or net short, you lost money today. And that's these swings that this big of a swing is, we don't get them too often, but when you do, you need to be aware of them and realize that the volume was pretty good. Not great, but once, combining good, better than average volume with a big decline like this, it needs to be, taken note of. So, uh, let's see what else we got going on. Dow pretty much came back and tested a value area high for last month of May, failed against it. Now we're at the point of control for the year. We'll see if we hold, but if we don't, that takes caution right there. Nasdaq, this we're in this high volume area, just like the Dow, probably the S&P too. Came back, tested value area high for month of May, failed against it, and now we're rolling over. VIX, pretty big bounce today. Now the 55 moving average. We'll see if it has more upside, but we are below. 21 was pretty big pivot in the VIX. Just keep an eye on that. But it was up 17% or so today. So that's, you need to be aware of that. Gold, kicking myself for not getting short this the 19th. And it continued to roll over the 20th and then just fell apart today on the 21st. And, kicking myself for not doing it because I'm net long gold. And I have some puts in place, but I wanted to put on a short position on GLD, and I didn't do it. So, and just to show you why, I'm going to show you on, hold on. Okay, gold was pressing up against high volume area from last month, and we saw some selling. Obviously, we got this huge sell bar, came back, tested it, struggled to get back into this range, and then we got members you'll know, setup bars for the sell side to find risk, and great trade. And once the trade's in, try to use the trailing stop, which has a stop at 615 right now. Now realize, given that we're back down to prior swing lows, you look for a potential reversal bar, and you get out of the trade, you scale down. But for right now, I would continue to use the trailing stop, as it should be down towards 1600 or so tomorrow. Just don't, and also take profits tomorrow on your shorts if you have them, and your longs. Don't let that come back in your face. Silver, basically going to break down to new lows. Nearly sold that short, but didn't. Something I did sell short actually today was Baker Hughes, and the reason why was because here we are, a big congestion level, and now we're getting a rollover off intra-month point of control value area high, last month's point of control, and the point of control for the last 90 days. A lot of volume there, good reversal area, and then immediately this morning, you get a nice down bar confirmation that this is trying to move lower, and you go with it, and it paid off. But actually, what you'd want to see from the short side is to see this break new lows and then ride it down till it stops making new lows, or you get stopped out. But the trailing stop almost has it at a break even now. So if we get some type of strong buying tomorrow, try to close the position out. Maybe keep a stop above 39.43. These little highs right here. And if you get stopped, you get stopped. But four bars of straight selling, straight down to the value area low for the month. You could see some type of wiggle, just like we saw here. I'm not saying it's going to go back up, but we'll see. So overall, just going to look at the S&P here. Value area for last month is resistance. This is the top of the range. The bottom of the range could be right here. It could be 1300 value area low for the month. The bottom of the big high volume area, which is from 1320 to 1300. or you need to be careful if we break these lows, we could push lower. So be careful. Don't don't overexpose yourself one way or the other, and realize that the market will always give you an opportunity, whether short or long. And if you had trouble today, if you're too overexposed to the long side, maybe long too many names, in quantity, not quantity, the amount of names you were long, versus, 2 or 3 names with conviction or the ability to get out quick and not hesitate. And that's the purpose for stops. But if you're not quick enough to the punch, then you're basically holding through this pain, and now it gets to a point where you're saying, I can't sell now. I'm down too much. Don't do that. When it starts to break down, you have to understand this. We're at a potential resistance, and then you start to get selling off of that level. When it starts to come down, you have to get out of your longs. Don't bother going short if you're having trouble getting out of your longs. You have to work on your management of the trading, of each trade, versus trying to slap so many trades on. It doesn't work like that. It works by managing each trade properly and not overexposing yourself. For example, buying into this resistance is overexposing yourself to the long side. Buying the dip is not overexposing yourself, because you have lower risk. You can, hopefully ride it up. And just like selling, don't sell or don't go short into the weekend at this, into the point of control for the month. Don't do that. The resistance was up here at the value rate high from last month. Remember, use prior months. There's a little nugget. Prior month profiles, that is. So anyways, hope this helps. Take care. Have a good night. Talk to you tomorrow.